Fourth quarter earnings fell at Canadian copper producer First Quantum Minerals. The company says it's confident, however, about its outlook for the year with record high copper prices. For more on the key drivers for the stock, which has roughly doubled over the past year, let's go to Craig Hutchison, Director, Base Metals Analyst at TD Cowen. Thanks for joining us today.
Thanks for having me on the show.
So net earnings fourth quarter fell to $25 million U.S. compared to $99 million in the previous year. Why the steep drop? What happened?
There were some, if you're looking at just the earnings perspective, there were some one-time adjustments. Taxation was a little bit higher in this quarter. I think we focused more on just the EBITDA. It was a little bit lighter than we expected. $464 million. That was about 8% below where we were, probably about 4% below the street. It's important to note that the production results had already been previously released. We did have the costs as well. There was just some of the issues, just from an earnings perspective, are more some higher costs at one of their core operations called Kansanshi.
Okay. The CEO said he's confident about this year's outlook because of record high copper prices. We know they've been rising, but Goldman Sachs expects the rally could fade. What do you think?
We think the prices here, we're modeling about $550 for this year, so a little bit lighter than they are trading today. I think the strength in the copper price is really going to be held up by the supply concerns. There's been a huge amount of disruption we saw last year. Major mines like Kamoa-Kakula, Grasberg, et cetera, have lost some production. So I think some of that supply is not going to come back this year. And so we expect pretty tight markets. So for the next couple of years, we expect prices to sort of trend in that sort of $5.50 to $6 a pound range.
Okay. How dependent is First Quantum on some progress in Panama?
It's certainly a big part of the investment thesis. The stock's been underperforming for the last couple of years, just on the back of the concerns of when a restart will happen. The company's obviously very confident that they can get a deal done at some point. The government's mentioned the plans to begin negotiations or to at least try and get a deal with the First Quantum by June. Obviously, that happens. There's significant upside to the shares. There's a few things that need to happen before that. There's an environmental audit that needs to be concluded. That'll likely be done in April. And then obviously there's a negotiation process in terms of what the government's ask and versus what the company's expectations.
So is June realistic?
So we're modeling a restart in the first half of next year. So there is obviously some flex within that. The company has said it would take about 6 to 9 months pending an approval by the government to restart. Obviously, there's a huge amount of staff rehiring that's required. Importantly, the government's also mentioned that they're going to allow the company to process stockpiles. So there's about 70,000 tons of copper that's contained in stockpiles, where they're still waiting for a formal approval from the government. But when that goes ahead, take about 3 months to start up processing, and that's really going to help them, eventually get to the full restart. It'll allow them to hire some staff, refurbish some equipment, do some environmental remediation work they need to do. So ultimately, this process of processing the stockpiles will ultimately help these guys down the road in terms of hopefully a full restart.
Okay, you've noted net debt is up in the fourth quarter. What does their balance sheet look like overall?
So they've done a lot of work over the last couple of years to improve their balance sheet, improve their liquidity, a lot of good work. They've sold some assets. They've done some copper prepays. They've turned up their debt. So as it stands today, they have on a pro forma basis, because they extended and upsized a revolving credit facility yesterday. They're also doing a bond financing today. But effectively, pro forma, they were up $2.3 billion of liquidity. So they're really not in any financial distress here. I think they've got a long runway to negotiate with the government in a good standing position, just based on the recent work they've done. So no really concerns on the debt front.
How are you planning around copper tariffs, which are still an overhang?
So with regards to tariffs, no real concerns for these guys. They do sell copper to international markets. A lot of their material gets sold to China. They're not a U.S. domestic producer, so no concerns on any retaliation from the Chinese. No domestic assets in the U.S. So if President Trump implements tariffs potentially we could get a decision here in June. really wouldn't impact First Quantum. Obviously, tariffs globally is an impact to GDP and copper demand, but I don't see anything specifically targeted at First Quantum.
Okay, so you have a hold rating on the stock. Can you share your price target right now?
Yeah, our price target right now is 41. And the hold really just comes down to the timing around a resolution and what that resolution will entail. Obviously, there's going to be negotiation in terms of some give and take from both sides, but just getting some more clarity on that really would help us move off the sidelines.
Got it. All right, we will leave it there. Craig Hutchison, Director, Base Metals Analyst, TD Cowen. Thanks for joining us today.